Kolkata is a city where culture meets commerce, and the business environment is such that it seamlessly intertwines age-old tradition with new-age innovation. But how does it all happen so seamlessly? Well, we're here at the ET Now Leaders of Tomorrow Season 12 Kolkata Springboard to find out for ourselves.
Known for its timeless legacy, Kolkata, India's first metropolis, has served as a commercial and cultural powerhouse in the East.
The Kolkata is famous for its food, so of course their restaurants is a big place. Apart from that, we have museums here, the zoo here, and all different sorts of places. So yeah.
Kolkata is famous for sports. Kolkata is famous for food. Kolkata is one of the main educational hub in West Bengal as well as India.
From heritage buildings to modern industrial zones, Kolkata is reinventing itself as a dynamic hub of commerce and innovation. With diverse sectors like coal, jute, logistics, and IT, the city continues to fuel India's economic growth.
If you see in the recent years, there has been a lot of development, especially relating to business. There has been a metro project which has been growing and it has been connecting the south to this place.
Well, Kolkata is a lovely place to be in, and the companies here, for example, the IT sectors such as TCS and Cognizant, Capgemini, there are multiple companies who are taking a place in the global business forward, I feel, yeah.
Kolkata blends tradition with ambition, driving growth while preserving its roots. Discover how this historic city is evolving into an industrial hub where legacy industries and new age businesses grow together.
Good evening, everyone. On behalf of IDFC FIRST Bank, I take great pleasure in welcoming all of you for this edition of Leaders of Tomorrow in the city of Calcutta. While we talk about MSME, Kolkata plays a very, very critical and important geographical part in MSMEs. It hosts to about the second largest number of registered MSMEs, so 88 lakh MSMEs registered here. And incredibly, it leads the number of women-led MSMEs. It has got the highest share in the country for women-led MSMEs. Plus access to markets, it is a gateway to East. It's got access to global markets. In terms of industries, it's actually a mix of both traditional, we see a mix of both traditional as well as upcoming industries here. Traditionally, of course, jute, the entire large proportion, more than 3/4 of the proportion is concentrated in Kolkata. And in terms of other traditional industries like leather is a large play here. As well as agri products is also, agri commodity products are also large play here. And we also interestingly see in terms of the new age industries, although it starts from a smaller base, the kind of growth that we are seeing, it's one of the highest growing in terms of 70% growth in terms of IT and IT-enabled services. So that's a kind of mix of both tradition as well as the new age businesses which is there. We've given a mix of traditional and upcoming businesses with access to port and with also becoming a logistics hub. There is a real energy in terms of the growth in MSMEs here. In terms of a brief introduction to who we are, we started IDFC Bank in the year 2016. We were, prior to this, largely an infrastructure lender. And in 2016, we got this license to start a commercial bank. And somewhere in 2018, we also merged with Capital First. So then the emergence of IDFC FIRST Bank. In the initial stages, because of a legacy of infrastructure funding, we were largely a wholesale bank. We were largely a corporate wholesale bank centered. But in the last 7-8 years, we have kind of transformed from a corporate into a retail bank. We used to have a 75-25% ratio of corporate retail. Now it's the reverse. It's 75% retail and 25% of corporate. One of the core things that we put out in all our products is we are a challenger bank, right? We are that way a new kid on the block. We are one of the last entrants to us to speak. Therefore, in every product that we do, there is always a differentiator to see what is an industry best feature that we can come out with, which will enable customers. From credit cards to working capital loans to any product that we take. For example, in credit cards, in this country, credit cards are always the APR, the annual rate that you pay on rollover limits on credit cards. The rates were always standardized at about 36% and upwards. It will anywhere from 36% upwards. We were the first ones to actually link it to your credit score. So if you have a good credit score, then the rates can start as low as about 10%. Also, your cash withdrawals on credit cards used to get charged. Your interest used to, your 36% upwards or whatever is the interest rate applicable, gets charged from the time you actually withdraw cash. So cash withdrawal from a credit card is actually a very, very expensive affair. What we had changed was within the limits of the credit period that you have, if we withdraw cash, it is considered as part of the credit limit, which means that you don't get charged any additional interest till the time your due date for payment comes in. So that's another kind of feature we brought in there. For instance, current accounts, we also got a feature of automatic movement to deposits where one of the complaints was, look, there's a lot of money coming in and going out, but I can't use it for FD because I do not know when the check would hit the account. Therefore, there's some idle funds lying in the account. So we said any balances above 2 lakhs will move into a FD. So that's the Bravo feature that we have, that any balances above 2 lakhs will move into an automatic FD. And when the check hits the account, automatically the FD gets broken and the check gets honored. So a host of features in most of our products that way. Especially when it comes to startups and MSMEs. So we looked at startups in 2 ways. One are early stage startups and the other is growth stage startups. In the early stage startups, what we had said was starting from the current account, because the first step is opening of the current account. We said nil balances for the first 3 years. And then, of course, we have the Bravo feature, which converts into an FD. And then the whole host of services, which is actually free of cost. In fact, we have listed it on our site as well. There's a whole host of services, which otherwise small charges, it keeps coming. We made entire thing free. Then one of the other things which really found a lot of taking and found a lot of interest in startups is that we connected with other founders. I mean, people who have made it successful, who have launched their startup and then the startup has then taken off. What we call as a founder success program. It's a kind of mentoring program which a lot of startup founders found value in it because they speak to people and understand and gain knowledge from them as to what is the path that they have traveled, because it's an entrepreneurial journey and there's a huge amount of learnings in terms of various pathways. Then as the startup matures into a mature stage startup, one of the first requirements which comes is a working capital requirement, because no one wants to dilute your equity for your working capital requirements. You obviously want to dilute your equity to build your businesses forward, to build scale. And you would not want to obviously equity becomes the most expensive form of capital. Therefore, you would like to borrow from a bank finance. And I've been in this lending business for like 20 plus years now. And banks used to typically take 3 years balance sheet, collateral, and then kind of fund it. But specifically for startups and growth stage startups who have found a product market fit. So when startups find this product market fit, we also have a program which is differential. It just not looks at the profits, because that time profits are not there. You're still at a cash burn stage. We look at things like runway, quality of the business model, quality of the investment which is there, and there's a metric that you're derived around it, which we look at investing in, debt investing in startups. So that's one critical portion which comes into play. Again, we also have a lot of VC Connect programs which we do, where we introduce startups to a lot of VCs, because, of course, one is the debt side, there's also an equity side that needs to be done. And we work with a lot of VCs in terms of funneling for the requirement for your capital raise. So these two things. And the other thing that a lot of startups work with us for is that, especially in the fintech space, yes, there's an idea, you would like to launch it, you like to, but you have not tested it out yet in the real world, right? So we do a lot of sandbox environment for API testing. So when you have a product which is running, we work with a lot of startups, especially in the fintech space, for API banking, where we provide a sandbox environment and where your products can be tested out and see how it works in a quasi real-time environment types. So it covers the entire suite of product requirements which an MSME or a startup would require, starting from a basic current account to a CMS facility, to a credit management solution, to a working capital requirement. Not only on the working capital side, but also on the capex side. For example, we have up to 3 crores, we do unsecured unsecured machinery financing. So which means that if there's a manufacturing company which wants to set up its buy equipment, so we not only do the working capital side of it, we also do the capex side of it. So the entire range of products which an MSME or a startup would require. One important thing, apart from the regular feature that I'd like to cover, is that we have set up a dedicated structured finance FEMA desk as well. So what happens and what we have really seen is that a lot of startups have global aspirations. Either you are setting up businesses abroad, or you're shifting towards the country from a base outside. You're wanting to shift inside. In both instances, and there's also a lot of FDA money which you want to raise as equity there. In all of these instances, we see that there's a whole host of FEMA guidelines that needs to get navigated. The last thing that you want to get tangled upon after your finalist evaluation, after the check is supposed to come to your account, the last thing you want to get tangled upon is in terms of FEMA guidelines and FEMA regulations. So we set up a structured finance desk which focuses on all the FEMA related guidelines and helps navigate MSMEs and startups through this entire path of raising foreign capital or taking capital outside in both ways. And of late, with all the global aspirations which is there, this is one area that is finding a lot of traction in this MSMEs. So that's in short the entire spectrum of services that we have to offer. My entire team is also there, and we'll be happy to catch up with most of you in case there are any specific queries on this as well. So thank you so much for the opportunity. It's been an absolute pleasure. Thank you.
We'll slip into a short break, but our coverage of the ET Now Leaders of Tomorrow's Season 12 Springboard here in the city of Kolkata continues on the other side. We'll be right back. Kolkata is a city where tradition and innovation are not at odds with one another. In fact, they seamlessly converge and coexist to create an all the more conducive business environment. That is what brings us to the city of Kolkata tonight. So welcome back as we listen in to our continued coverage. So Devendra, what does it feel like to be here and to follow our power-packed panel?
It was great. I listened to a lot of panelists, and whatever they said was pretty interesting. So gained a lot of knowledge from this session.
All right.
So thank you for inviting me.
Absolutely. All right. So we'll dive right in with a rapid fireside chat. Okay, Devendra, in your view, is it a more difficult time to be an entrepreneur today or say 40 years ago? Your view.
It is challenging to be an entrepreneur today.
Harder or more difficult than it was?
Yes.
Why so?
See, there's a lot of competition when it comes to entrepreneurship compared to what it was earlier. Earlier, if you talk about, say, 3 decades, 4 decades back, the business was more based on trust. These days, the trust element is not there. Everyone doubts you. Everyone has that element of doubt on you as an entrepreneur. Entrepreneurs are not seen generally by the government departments as the people who contribute to the revenue and the growth of the country. Instead, we are seen as probably we are trying to evade taxes and make more money out of it. But on the hindsight, we are working 24/7. It's a process that we put ourselves into it, and we are paying our taxes. And end of the day, there's a lot of challenges we face from the government departments.
Yeah, fair enough. And look, when challenges come in entrepreneurs' way, all right, I think there generally are 2 courses of action they can take. One is to fold the cards, bahut ho gaya, had enough, this is the maximum that I can go. And then you kind of find the pressure, the inspiration to press on, right? Have you faced those situations, in your personal and professional capacity, and how did you respond to them at the time?
Well, I've seen those challenges. I've seen dark days in my life where I thought that probably I will not be able to do it. I need to give up. But then, yes, if you really want to succeed in life, you can't let that fire die down. You have to struggle. You have to be a fighter. It's like you're in a war. If you tend to lose your weapons and you leave them on the ground, then probably you'll get killed. So business is something like that. It's a process.
All right. And sir, in your view, what are perhaps some of the 3 most commonly made mistakes that entrepreneurs, recommit time after time after time?
See, I feel over-leveraging is one of the most important factors as a businessman. You should not be over-leveraged. You have to ensure that your proper business plan is in place, your cash flows are proper, you should have right team at the right place, because the right team and right manpower really gives strength to that company. I believe that right manpower is more important than the bank balance.
Yeah, you brought up cash management, and oftentimes, what new companies and especially perhaps family businesses struggle with is kind of blurring the lines between personal cash flow and corporate cash flow. There's a huge tendency to do that. There's a huge tendency to, for example, not compensate yourself with a salary, kyunki, this is my family business, right? How might you guide entrepreneurs that are struggling with those decisions themselves?
See, when it comes to your own personal wealth, you have to be very sure first that the business they are running, you need to ensure that that business itself is a profitable business. And then from that business, probably you can gradually draw some money as salary. Some money can be kept as buffer amount, which could be used as dry powder whenever the business needs that. Maybe something like unforced situation. When it was during COVID, we saw that a lot of companies collapsed overnight because they did not have that excess liquidity or dry powder to cater to that unforced situation. So that is needed.
Yeah, absolutely, absolutely. And if there was perhaps an entrepreneur from yesteryear that you'd love to trade places with for a moment, or a day in their life, who might that be and why?
Ratan Tata.
That's an easy one. That's an easy one.
He's the best.
Yeah.
Kind of. He's the best. I admire him.
Absolutely. Yeah. Nothing not to admire. Yeah. No. I think we'd all love to be in that position. And look, now, when it comes to, sort of a company taking on the next level of maturity and blossoming in terms of not just market size and market opportunities, but in terms of like cash flow, bank balance, fiscally growing, right? At what age and stage in the company's life cycle does it make sense to seek out professional guidance? Because oftentimes what happens is you continue to nurture the product and not necessarily the paperwork. So your view on balancing act between the two?
Yes, that's very important when the company is growing right from the startup stage, where you have been able to develop a product which has a market acceptability, where you can scale in that product, and you see the growth, the demand. So that means you've already built a proof of concept. So once you have that proof of concept, then definitely you should bring in professional who can help you in taking the business to another level in terms of funding, in terms of developing more ideas into the business.
Now, just playing devil's advocate for a moment, when it comes to onboarding professionals, right? I think perhaps many entrepreneurs struggle with the dilution equation. Increased stakes of your business are now not ghar mein, they're ghar ke bahar. For sake of being very colloquial, correct? And that, of course, raises alarm bells, right? So as the company continues to mature, I understand there's no blueprint for what you do when, but when does it then make sense to sort of say, I've exhausted my capabilities, my inbuilt abilities, and I now need an outsider in the mix?
From the day of inception, when you feel that, okay, you have been able to do a proof of concept, you're selling your product, you have been able to identify the market, but the year-on-year growth is something which you're seeing is stagnant. That is where you have to start evolving in terms of either your own thoughts or bring in someone on board or seek a mentorship where, you can improve on that, where the growth is not stagnant.
Right. Well, speaking of mentorship, right, when we look at the Kolkata small business community and its startup ecosystem, right, and you've nurtured several other entrepreneurs, but look, of course, your time is limited, everyone's time is limited. So how do you go about picking and choosing who you consider to be a promising entrepreneur? If you had to put it in, plain facts and figures, or even just qualities and characteristics, what do you look for?
So one, you have to pick up an entrepreneur who's from the domain space that you want and guidance towards. And obviously you should also pick up on people who have failed in business, because you learn a lot when you communicate with people who have failed in business or services or ideas that they have come up with, because failure leads to success.
Well, if we are talking failures, and you can dip into your personal journey or any anecdotes, perhaps you could share some moments with us that were, particularly pivotal in your journey to ultimately where you are today.
See, if we talk about my journey started post-college. I joined my father's business, which was a trading shop, electrical trading shop in Ezra Street with a couple of employees out there. We managed to set up a small manufacturing unit for aluminum cables and conductors. And we were supplying to one of the only electricity board in the country. That was our only client. And unfortunately, at one point of time, that board declared themselves bankrupt. So whatever money we had earned and whatever business that we were doing got stuck. Then somehow we landed in Surat. We set up a polyester manufacturing unit. So that also didn't work well. And as the fate or the luck is, and after that couple of years, the utility where we were supplying the material, they started repaying. So that is when we decided we need to rebuild a proper new manufacturing infrastructure catering to large base of clients. So I would call that was the time, I would call that as the restart of my journey. And from there, I have not looked back. It's been almost like 2 decades now.
And now if we were to look at next-gen entrepreneurs, right, versus entrepreneurs of yesteryear, how do you compare the two in terms of, characteristics, the drive, the willingness to push on, and what are some of, if you could create that sort of cocktail entrepreneur, if you will, that has characteristics of both generations, what might he or she look like?
My business is a 3-generation business. So I have my father, I have my 2 kids. I have my eldest son who's 28. He's running the show mostly these days. So I get sandwiched between my father and my son. So father has completely conservative approach towards business. The son has very aggressive approach towards business. So I need to balance them. Son has a very strong head where, so sometimes it becomes a lot of argument and challenges with the young ones. But ultimately, you tend to give up as a father that, okay, he wants to do it. Ultimately, he's the one who will be doing it. So why not give him that opportunity?
Absolutely. And, today you stand as a seasoned entrepreneur, but if you were to, look back to when you first got your start in this industry, right? What do you know now that you wish you knew then?
How to manage my cash flows and how to pick on the better human resources is something which I would have known then. Things would have been a little better.
Well, Devendra, thank you for sharing such a, a personal aspect of your journey with us. It was a pleasure to have you amongst us, and we continue to wish you and the larger team all the continued success.
Thank you.
Thank you so much. Thank you so much, ladies and gentlemen. Well, that concludes our coverage of the ET Now Leaders of Tomorrow Season 12 Springboard here in the city of Kolkata. I'm Pooja Jain signing off. Thanks for watching.